Welcome to your daily 5 minutes market brief with JPMorgan and Luna. Today is July 31st, 2025. I am Luna.
I am JPMorgan. Okay, so let's dive into the numbers. What did we see in stocks?
Well, the major indexes didn't move a huge amount. S&P 500 slipped, 0.12%?
Yeah, just under 6,363. Dow Jones dipped a bit more, 0.38%.
But the Nasdaq actually managed a small gain, 0.15%.
And we saw that split, right? Those interest rate sensitive stocks, consumer stuff like Home Depot, they took a hit after the Fed news. Makes sense. Higher rates mean pricier loans.
Right. Hits consumer spending directly, but tech, as you said, did a little better.
Okay, what about gold? Saw some movement there too.
Yeah, gold initially dipped, but then bounced back, up about 0.5% to around $3,292 an ounce.
Classic safe haven move.
Textbook. With those trade worries bubbling up, investors look for stability. Gold tends to be that financial bunker, like you said.
And oil kept climbing.
It did, yeah. WTI crude, the U.S. benchmark, up for the fourth day running, around $70.40 a barrel.
Driven by supply fears. That sounds like the geopolitical angle.
Definitely. President Trump's strong words on Ukraine, threatening tariffs on countries buying Russian oil, that all feeds into supply concerns.
Interesting. And Bitcoin, the outlier.
Yeah, Bitcoin just kind of hovered near $118,000, ticked up maybe 0.2%.
Pretty resilient given a cautious mood everywhere else. And it trades 247, of course.
Exactly. And then you have Treasury yields. The 10-year yield nudged up a bit after the Fed meeting to about 4.37%.
Reflecting fewer hopes for rate cuts soon.
That's the read. Which brings us to the Fed meeting itself, really the centerpiece of the day, wasn't it?
Absolutely. Let's unpack that.
So the Fed, as expected by many, left its benchmark rate unchanged. Still 4.25% to 4.50%. Fifth time in a row.
But the vote wasn't unanimous this time.
No, and that's the key detail. A 9-2 split vote. 2 members actually wanted a rate cut.
That's pretty rare, isn't it? What does that signal?
It signals, significant internal disagreement, maybe differing views on the economy's path, perhaps even raises questions about political influence, though the Fed maintains independence.
And Powell's tone.
Very cautious. Jerome Powell basically said it's too soon to know if a rate cut is needed. He stressed that data-dependent approach again.
Which kind of poured cold water on hopes for a September cut.
Definitely tempered expectations there.
But then you have this strong economic data coming out almost at the same time. U.S. GDP growth for Q2, 3% annualized.
Yeah, way above the 2.3% or 2.4% economists were looking for. Shows real resilience.
Plus the ADP private payrolls report for July, 104,000 jobs added. Also beating forecasts.
Right. Solid labor market indicator.
So how do you square that? Strong data, but a cautious Fed saying too soon. It feels a bit dissonant.
It does, and that's the complexity right now. It highlights why they're being data dependent. They see the strength, but maybe also risks we haven't even touched on yet.
Like the trade tensions.
Exactly. President Trump hitting India with a new 25% tariff starting August 1st.
And he specifically linked it to India buying Russian oil, didn't he?
He did criticize their trade barriers too, but the Russian oil link is significant. And then that wider threat, potentially 100% tariffs on any country buying Russian oil if the Ukraine conflict doesn't move towards resolution.
Wow. So trade policy is being used very directly as a geopolitical tool here.
Very directly. It's not just about balances anymore. This is economic pressure tied to alliances and conflict. And unsurprisingly, that spooked markets a bit, pushed investors towards safety, that risk-off mood.
Okay, so looking forward, what data should we be watching?
Key releases coming up. Thursday, July 31st, we get the PCE price index for June.
That's the Fed's preferred inflation measure, right?
Yeah, that's the one. Plus the usual weekly jobless claims.
And then Friday, August 1st.
The big one, the July jobs report. Non-farm payrolls, unemployment rate, wage growth. Crucial stuff.
So the Fed's in wait-and-see mode, and these reports are basically the things they're waiting to see.
Precisely. Every piece of inflation and employment data is going to be heavily scrutinized by investors now.
Let's certainly think. So summing up the outlook, still cautious.
Yeah.
But maybe with some underlying economic muscle.
I think that's fair. You've got the Fed uncertainty. Those rate cut hopes have definitely been pushed back. People are bracing for potentially higher rates for longer.
Which could slow things down in certain sectors.
Right. Then there's the trade war risk, always lurking. Supply chains, corporate profits, that could flare up.
And those political risks, maybe even related to the Fed's split vote. questions about independence.
It adds another layer of uncertainty, absolutely.
Yeah.
Policy moves, election cycle noise, it could all inject volatility.
So bottom line, markets are super data dependent right now. Every report matters. Vigilance is key.
Yeah, yesterday really highlighted that balance. You have solid fundamentals providing a floor, maybe, but the Fed's caution and these trade fights are definitely putting a lid on things.
So as we wrap up, here's something to think about. In this environment where every data point seems to shake things up and risks feel elevated, what's your strategy? How do you plan to stay vigilant to see the real signals through all the noise without just reacting to every single headline? Something to consider.
Enjoy the brief? Please like and subscribe. From equities and bonds to global risk sentiment, we deliver day's key market moves, macro trends, and institutional flows in just 5 minutes. Live stream coming soon. Stay tuned.